Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, October 26th, 2022. Before we look at the charts, just want to encourage you to please click like each and every time you watch the daily Tesla report or any content that's uploaded to the Wicked Stocks YouTube channel. It helps us out a great deal in being found on YouTube. Also subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded, which is at least once a day. And please share the videos, if you would, with friends and colleagues. Let's take a look here. I'm going to go start off with the big picture once again, that about a month ago, following poor production numbers on a Sunday, the following Monday, we gapped below this 2/3 speed line, then indicating our first near term. Near term for me is kind of like 2 to 3 weeks. Not short term, but near term. And then midterm is more like 3 to 5 weeks. And so our near-term objective was 206.85, that May low from this year. And our midterm, which is like a 3 to 5 week dynamic or target, anticipating still, I might add, the 175.76 to 183.87. This is the weekly chart. The numbers are a little different in the daily chart, as you can see lower right. By the way, this document is downloadable for free. We offer it on our website. It's a PDF document. You can click on any of the small charts on page 1, and it opens to the larger, views on the respective page. Anyway, this is the big picture. It's still in play, by the way, and what I mean by that is the 175.65 to 184 objective is still in play below this channel structure that today is at 224.24. We came close to testing that on Tuesday. It's likely to be tested today. We're just below it. 224.24 can contain weekly buying pressures. And from here, we can quite easily fall back to new lows. The low that was actually put out on Monday can be taken out, by the way, by Friday. So we can, over the next few days, assuming we hold below 224.24, fall to new lows. And this 175.65 to 184.05 area is kind of right in here on the chart. You can see how we could quite easily test that lower zone by the end of next week, holding below 224.24. Now, 224.24 is also our upward pivot point through the rest of the month and into November. If we happen to push or open today above 224.24, you should expect at least this high here that you can see from about a week ago at 229.82. And more than likely, if we push, especially if we open today above 224.24, 236.64 in reach. And that is nothing more than this former trend line against these lows going back to August and September, 236.64. So pushing or opening today above 224.24, you should expect 236.64 on an intraday basis, where we can place a daily high. If we push through 236.64, 242.92 is attainable intraday, as you can see up here. So that's kind of the upside day trade dynamic. But as far as the rest of the month goes and into November, if we settle today above 224.24, I do believe, I'm going to show the right chart, that the 264.50 former channel bottom becomes a realistic 2 to 3 week target. And that would put us into the middle of November, perhaps. It could be much sooner. There's going to be give and take on the way up, but I think 2 to 3 weeks if we close today above 224.24, 264.50 expected. There's a lot going on up here. I will refine all of this if we get the buy signal above 224.24. There's new speed lines coming off the November all-time high to take into account, so forth and so on. They'll be in the 270s. So 264.50 is really the start of probably around a 10-point range of meaningful longer-term resistance that becomes a 2 to 3 week objective if we close today above 224.24, the mid-260s and mid-270s, able to contain buying through the rest of the year. And from there, we could fall back again to this low area of 206.85 or lower in the weeks to follow. Let's talk downside today. I can actually show here. We do have all of our minor support levels are carefully chosen, but 213.50 stands out. That is the high of the low. That low is placed on Monday. it can contain intraday selling. We could trade inside this wedge for a good part of the day. 213.50 floor to 224.24 ceiling. But 213.50 is susceptible to giving way because 224.24 is much more significant in terms of its trend-defining applications as we move into November, and the fact that below which this market can quite easily fall back to new lows over the next few days. If we happen to break 213.50 on an intraday basis, the 206.85 low from May is in reach. I keep holding to this as our 2-star support. We've broken below it. We even closed below it a couple of weeks ago, came springing back. It is the level that if settled below one more time, we did so once again a couple of weeks ago, should then yield 197 even within a day or two, and that's targeted 175.65 to 184.05 area within a week or two of closing below 206.85. Once again, that 175.65, and this is the daily chart where it's actually properly shown. You can see how if we settle today below 206.85, we could quite easily by the end of next week fall into what is still considered a targeted zone of long-term support between 175.65 and 184.05 that can absorb selling through the rest of the year and possibly through Q1 of next. From here, we can turn back up and we'll just kind of take it one day at a time at that point. But, once again, I'm going to say that holding below 224.24, and I should have it illustrated here, but I don't. It is that descending channel top. We'll keep 175.65 to 184.05 in reach over the next week or two. And if we close above 224.24, then we actually have a decent buy signal over the next 2 or 3 weeks into the mid-260s, where we could top out into December activity, possibly the balance of the year. I think I pretty much summarized everything. Please click like and subscribe. Be back tomorrow with Thursday's Daily Tesla Report, and you have a great day.